Update settings. Boom. We live on YouTube. Y'all jump over there. Y'all jump over there if you wanna if you want what shout out AJ. AJ my one. There you go. Y'all pull up on YouTube. When I see the first person tap in, when I see the first person tap in, I'm getting off Instagram. And we're gonna go ahead and get into it on YouTube. I already got it running. So y'all tap in. All I need is one. All I need is one. Let me see. Change that to like. They go. Let's go. All right, y'all tap in on YouTube if y'all want to see the lunchtime lesson. Gone. Yep. All right, let me close that out. All I need is one. That's all I need. Let's get into it, man. We gonna y'all see I got my mask. I think that old Marion done caught up with you, boy. I wasn't feeling I wasn't feeling too spiffy yesterday. And Chris, you know what I'm saying? Chris had came up positive. You know, I was the person that administered his test, so I think Omarion might have caught up to me. Touch. So, one of the cousins hit me up and was like, "Can you explain? Can you explain what you mean? Stopped out in profit. Like whenever let me read it. Let me read it so I don't mess it up." He said, "Can you help me understand how do you get stopped out in profit? Every time I get stopped out, I'm in negative. Maybe you can explain it on your next tidbits, right?" So I said, "Okay, I'm gonna make a lunchtime lesson, right?" Yeah, we doing good. Appreciate that. Everybody doing good for the most part. Chris doing much better. I guess I could take this off since I'm back here by myself right now. Chris doing much better, you know, and I don't feel sick, but I don't feel 100%, and I keep on, you know what I'm saying, like I got this crazy cough. I be real fatigued, so I think old Mariana caught up to me, but that's neither here nor there. Let's get into it. Y'all share this out with the cousins on IG, and I set up a what's the name called lunchtime lessons for all of these lunchtime lessons. So y'all tap in for everybody that's tapping in later that's still on the 9 to 5. We're gonna go ahead and jump over to the desktop, right? So this my trade station account. I got it in Sim right now, but I don't have any oh, let me see if I think I might have did. I think I might have did something on stop losses and risk management and stuff like that. Let me see if I got some slides on that. Tim's tidbits. Uh, do I got any slides on that? Fundamentals, analysis, portfolio management. No, it's not that one. Research, swings, Fibonacci, Q and A poll, risk management. Let's see what's in this one. Let's see what's in this one here. Uh, all right. Oh, there it is. Okay. FOMO. Oh, this one that I did on risk management. Let me see if there's anything helpful in here. Mm, this is just basic risk management. That's just basic risk management. Ain't nothing real helpful in there, but just the long and short story of it is like you got everybody. The first thing people think about when they think about a stop loss, right? Is I always say vitamin C, zinc, sea moss, load up on them. Okay, sound like calandra now. So the when the first thing people think about with the stop loss is like, you know what I'm saying, stopping me out if the trade start going against me and I'm in the negative, right? That's true. That's the first line of defense, because before you get into any position, let me go back to camera only to say this so I ain't y'all just looking at that crazy screen. Before you get into any position, you should know when you're getting out, for the bad and for the good. So you want to have a target set, right? And you want to have a stop loss in place to secure your risk management, right? So this is what I always tell people, right? 2020 was an anomaly, right? Don't be going for these astronomical gains as far as your profit target. Don't be going for these 100%, 200%, 300%, especially if it's like a longer term option swing. You know what I'm saying? It take a lot of moving in that stock or that ETF to get it to 100%, 200%, 300%. If it's a long term, if you got a leap that's out like a year or 2 years out, it's gonna take a whole lot of moving to get it up in them 300, 400%, man. It's like, now you can get those big percentages if you playing them weeklies. You know what I'm saying? Like I just did a swing. I got stopped out in profit yesterday on two swing positions I did for the SPY, and I had them for February 25th. You know what I'm saying? And I got it on Friday. I bought it Friday after the close, and Wednesday I got, like yesterday, I got this close to 100%, and that's a monthly. And you see how the SPY was running on Friday, Monday, Tuesday. You know what I'm saying? The SPY had to move week from Friday to Tuesday. We had went up like over 5%. You see what I'm saying? So it's like, don't be trying to go for them big home run targets on your leaps. You know what I'm saying? Like 50% on a leap, that's good money, man. You know what I'm saying? Like, go for the small, consistent gains, and that right there, that's going to help you, you know what I'm saying, build your confidence. Because I was on Abby Live last night with AJ, and she was talking about how she let her Amazon, she got up to almost 90% in her Amazon, and then she watched it go all the way back down to like 99% negative. She sat there and watched that fall. What that tell me is, one, she didn't have a stop loss in place, and two, she didn't have an exit strategy. And you got to have your exit strategy before you buy the position, right? So Tim, how do I come up with my exit strategy? I'm glad you asked that. Everybody exit strategy is going to be different, because your risk tolerance may not be my risk tolerance. You may be willing to lose or risk more than I'm willing to lose or risk. So that's an individual person. It depends on your account size. It depends on your stomach for taking losses. You know what I'm saying? It's like a whole lot that go into that. So I can't tell you how to come up with your risk tolerance. But what I'm gonna share with you today is how to actually, you know what I'm saying, set your stop loss to get out of the trade after you get in, not only before you start going into profit, but after you get into profit too. And right now I don't have any positions open. So let me see if I can go into my let me see if I can go into my sim account and just buy something. Like I can't even, because I'm gonna need it to move. I'm gonna need it to move into profit. Okay, I'll just talk about it. If I don't know if you can see this right up here where I'm circling. It says OCO and OSO orders, right? Not all. What OCO means is order cancel orders. What does that mean? That means when one order gets filled, it automatically cancels another order. Meaning, if if your position is going up and you hit your profit target, the system will automatically cancel your stop loss, and vice versa. If it's falling down and it hits your stop loss, the system will automatically cancel your profit target order. So that's a way that you can set it and forget it, as they say. You go in and set it and forget it, right? So that's the first thing people think about when they say, okay, I'm setting my stop loss. If it starts going against me, I don't want to risk no more than 5%. And some platforms will let you go in and do it based off percentage. And like I say, I'm not even in a position, so I can't even show it to you. Because if I come like down here where all these say exit bracket, right? If I was already in a position, I'll just come here where it says, this is the one I typically go to, exit bracket, one limit, meaning that's my one profit target that I got, and one stop limit, meaning it's all or nothing. Once I get to my profit target, close all my contracts. If I hit my stop limit, close all my contracts. That's why it's got one limit and one stop limit, right? And then when you go to the ones that say one limit and two stop limits, that means if I hit my profit target, close all my contracts, but I got two different stop loss limits. I got two different limits that I want to get stopped out at. You know what I'm saying? Like, shave some here and shave some more there if it keep falling, right? And with all of these stop limits, you can like put it into the profit area. And the easiest way to do that, and I know probably cannot read this because it looks super small on that screen over there, right? And it's just like it's just self-explanatory with, like, you know what I'm saying, 3 limits. And like the limits is the profit target, and then if it just says stop level on this platform, that's a stop market order. Some platforms say stop, some platforms say stop level, some platforms say stop market. That's just a stop market. And whenever you set in your stop, right, you want to take into account the spread, right? And so let me explain what I'm talking about there. Let me explain what you want to take and count the spread. And y'all know my ADD be acting up. I ain't got no slides. So if I go to getting all over the place, y'all bear with me. I ain't got no slides. Okay, Tim, what are you talking about? Taking count the spread, right? And it's super hard to see this. I wonder, let me see if I can zoom in my screen a little bit. Can I blow up my screen? Where's the view? I wish I can blow my screen up. I don't know how to blow up the screen. I want the screen because you can't hardly see it. Did that get any bigger? Did that get any bigger? Oh, I'm on the wrong screen. It's the other screen that's getting bigger. Okay, I need which screen is that? This screen. All right. I'm like, that ain't getting no bigger. Okay. All right. It's not making the background. It's just making the front bigger. It ain't making the background bigger. Oh well, I tried. But anyway, let's get back into it for all the people. Oh, wait a minute. Did it get bigger? It actually did, I think. Oh no, it didn't. It didn't. All right. For the people on the replay, let's get back to it. All right. So what I mean by the spread, if you're looking on here, you gotta ask and you gotta bid, right? And right now, the SPY usually have really small spreads, right? And you know, most time if it's really liquid on the SPY, it's only gonna be like uh uh anywhere from a 3 to 5 cent spread. Sometimes I seen it get up to like 7 cent. You see what I'm saying? So when you putting in your stop or your stop limit, right, you want to take into account the spread. Let me see if I can pull this up down here. Let me see if I can pull this up down here so I can write it out. I'm a visual person. So I'm gonna try to see if I can hook y'all up. Whiteboard. Don't mind that. I don't know what my son was drawing. How do I get this out of the way? Nope. How do I move it? Oh, like this. Okay. Yeah. That's when I made the list. I put Zay on my list. Okay. Okay, so all right, when you're making the okay, we got to stop, right? Stop or stop market. Y'all excuse my writing. Or stop level. Right? Uh-oh. I done ran out of room. Stop level, right? All of these are the same thing. It just depends on what platform you on. This is a market order. So when you putting in your stop, right? Let's say you bought a 450 call SPY. You bought SPY 450 call at $5.25, right? So you bought it for $5.25. This is what you paid, right? That's what you paid, right? And then let's say your profit target is 100%. Well, let's say your profit target is 50%. We're gonna go. We're doing a monthly on this. We're doing a monthly on this, and we being real conservative. So we saying our profit target is 50%. Cause we're being real conservative. We're being real conservative on the monthly, right? So some platforms will let you do it. Will let you. Am I going out of focus? What am I doing? Let me get this together. Looking down, looking crazy. Hold on. All right, some platforms will let you do it by percentage. So if your platform will let you do it, like on my trade station, it lets me set my targets by percentage. So I can go in and set it at, you know what I'm saying? I could set my my exit. I would set a limit, right? You set a limit order. This is your profit target. We're gonna put PT. It's gonna be a limit order, right? It's gonna be a limit order because you want to sell it at a certain limit. And if your platform allows you to do percentages, you would just say 50%, right? If your platform allows it, right? Let's say platform specific. I ain't no spelling genius, so y'all don't judge me, right? If your platform allows it, you'll put for your profit target, you'll put in when you placing your order, right? Your profit target is going to be a limit order, right? So it's going to be the one that says limit, right? And you're going to set limit order, and if your platform allows it, you're going to say 50%. Now, if your platform doesn't allow it, right, with options, you got to do some math. So you paid $5.25 for it, right? So you're going to go oh yeah, there you go. You're going to go 5.25, right? You can either go times 0.5 or you can go plus 50%. You know what I'm saying? Whichever way makes sense in your mind. You know what I'm saying? Like, I just go times 0.5, right? And so that's $2.62, right? That's doing it. That's you know, that's doing it. Let me get out of here. How do I back up? I'm on this doggone right? So if that means you got to add $2 and whatever. But if you want to do it where it shows you the exact number, you'll just go 5.25 plus 50. What's my percent equals? Cause did you see it's the same thing. Now 2.62.5 is the same percentage. So if you're going times 0.5 or plus 50%, it's going to show you the amount you got to add to it. But when you say plus 50%, it's going to give you the number that you got to put in. So on this right here, like your profit target, you would put in your limit order for $7.87 or 88, whichever one you want to go for. Let's just go 88 because it was 787.5, right? So we're gonna round up. So we're going 788. That's our profit target, right? And we going for 50%, right? And let's say we're only risking 10%. Let's just say 10%. 10% is a good range to let the SPY breathe. You know what I'm saying? That's a good range to let the SPY breathe if your risk tolerance can handle that, right? Anywhere from 5 to 10%. But you want to take into account your account size. You know what I'm saying? So if your account size is, let's just say if you're risking 2% of your overall account, right? If you're risking 2% of your overall account and you got a $2,000 account, right? You got a $2,000 account, right? And your risk tolerance is 2% on any trade, right? I probably should have put that equal there. They put scratch what my eraser at? There it is. Get out of there. Right? So you got a $2,000 account. You ain't risking no more than 2% on any trade. So that's like $40 a trade. Let's check my math. Right? So 2,000, right, times 0.02. $40. My math on point. So that means if you risk on any trade that you're putting on, you're only going to risk 2% of your account, right? You're only risking 2% of your account. So what does that mean? That means you can't lose no more than $40 on a trade if you got a $2,000 account and your risk tolerance is 2% on any trade. So for this trade right here, you paid $5.25, right? You paid $5.25. So that means you can only lose 40 cents on this trade to hit your risk tolerance. So what is that going to be, right? What is that going to be? So you're going to say 5.25 is what you paid minus your risk tolerance on any trade, 40 cents. Because in options, you move it two places, that'll be $40, right? So $4.85 is going to be your stop loss on this trade, right? So when you put in your order and you putting in your OCO order, like you already in the position and you got your and you going into your position and you setting your limit for 785 because you shooting for 50% on this trade, right? And then your stop limit is going to be stop limit, and it's going to be stop limit. That's the type of order it's going to be, right? Let's say order type, right? Order type. Yeah. So these the order types. So stop limit on this trade right here. Now what you're going to do, you got to take into account the spread. Remember I said about taking into account the spread, right? You got to take into account the spread. Let me bring this down here. And you probably can't see that, but what I said, the 450, well, that's actually $7 and something right now, but we know. So the spread on this right now, you see that's the bid is $7.50 and the ask is $7.53. So we're looking at like a 3-cent spread. We're looking at a 3-cent spread, right? So you got to take into account if what we said it was, 485 is the max you're willing to lose, right? So it's going to be a stop limit type, and then inside the order, there's going to be a spot that says stop and a spot that says limit. Inside your, not to be confused with the limit order here, right? We talk about the stop limit order now. So your stop, right? Your limit is going to be 485. That's your limit, right? Because that's all the money you willing to risk. 485 is your limit. Your stop is once it drops to this price, turn on my order, right? And so the spread that we why my mouse ain't moving on here? Oh, there you go. Right? Once we got to remember the spread. It was a 3-cent spread, right? So once we get, so you're going to put in the stop. Once we get to 488, cut me an order and don't let me go no lower than 485. Right? Cut order, right? And then no lower than 485. That's how the stop limit works. You see what I'm saying? Cut me, and because you got to take into account the spread, because it's a 3-cent spread. So if you put the stop as 485, you more than likely would get out at 483, which is going to be outside your risk tolerance. You got to take into account your spread, right? So now that we understand how to set the stop limit, and then with this, let's just say if you want, I don't feel like setting a stop limit because I don't want it to skip my stop, because it will skip your stop if it jumped down. If like just say it gap down to 480, it'll totally skip your stop. It won't pay this no attention. It'll totally skip it, right? Because it gapped down, and then what happened once it trades back up to like 485, 480 in this range, then it'll get you out of the position on the way back up. It'll get you out the position because the order is still sitting there waiting to sell, right? Once it come back up, it'll get you out the position then. But let's just say you want to use a stop order. You want to use a stop order, right? Stop, or like stop market, right? That's what we're going to talk about now, right? You only going to see a stop price, right? This all you're going to see. You're just going to see right here where it says stop price. So on a stop or stop market, how I say stop or stop market, it's the same thing. You're only going to see the stop price. So if you don't want to get out no lower than 485, you got to take into account the spread, and we're gonna stick with we're sticking with a 3-cent spread. That's what we're sticking with. We're sticking with the 3-cent spread. Y'all don't mind my writing, right? So you take into account the spread. So you don't want to put 485 here. Why? Because when it get here, it's going to cut an order, and there's a 3-cent spread, and you're going to end up getting out. You're going to end up getting out at 483. You know what I'm saying? So you don't want to do that. What you want to do, what you want to put right there is 488. You're taking into account the spread. So now, this the downside to using a stop market order. Let's say you wake up in the morning and the SPY gap all the way down to 430. If it's still a 3-cent spread, you might get stopped out at 427, right? Gap down to 430. It's a 3-cent spread. You're going to get stopped out at 427. You know what I'm saying? That's like 61 cents below your risk tolerance. That's the only bad thing that I don't like about stock markets. That's what I don't like about stock market orders, right? So, are we all, everybody understanding that so far? If y'all understanding that, somebody put a 1 in the chat. If y'all understanding what I'm saying so far. Right? Do we got any ones? Right? Uh-oh. I moved the wrong thing. I see a 1. Okay. Cooking with Crisco. Now, let's move up here. And we're gonna keep the same. We're gonna keep the same thing with a what's the name? We're gonna keep the same thing. We're still running with the 450 SPY call. Right? We're still running with the 450 SPY call. We're gonna still run with this right here. At 525. We're still running with that. Right? We're still running with that. Boom. Okay. So now we're still running with this right here. We're still running with this right. This is our profit target. We're still running with our profit target. Right? Boom. Still running with our profit target. Now, when we get to now we're going to the stops. Now we're going to the stops because we done start moving into profit now. We done start moving into profit now, right? So if your platform allows trailing stops, right? If your platform allows trailing stops, you can put in what they call a trailing stop on instead of just doing a stop limit. If your platform don't allow trailing stops, you're going to have to manually come back in and update your stop limit, right? So now we bought it at 525, right? Our profit target is 50%, and so that's a profit target of 788, right? Let's just say we have moved into profit and we're at get back on the pencil, Tim. We're at $6.35 right now. That's an ugly 5. Let me try that again. There you go. We at $6.35 right now. We have moved into profit $6.35, right? So let's see how much that is, right? So 635 minus 525 equals $1.10 divided by 5. Backspace. Divided by 525, right? You've gone up 21%. 20.9. So you've gone up 21% on your position right now. So you up 21%, right? You're up 21% on your position right now. So you say, okay, now that I'm up 21%, I want to start a trailing stop. If it dropped back down 15%, get me out. Now, if your platform allow trail stops, right? If it allow trail stops, right? You got 2 different ways you can do trail stops. You can do a percentage, if you do a percentage, right, you're going to put in 15% for the trail stop. If your platform don't allow percentage, right, you're going to have to do the math. You're going to have to do the math if it don't allow percentage, right? So you're going to look at 635, right? You got to do the math on it, right? 635 minus 15% equals 539, right? 539, that's 15%, right? So if it don't allow you to do percentages, right, you're going to do 95 cent, right? It's going to trail behind 95 cent at that time right there. Now, the bad thing about trying to do trailing stops when it don't allow you to do percentages is because you're stuck with whatever you put in that block. You see what I'm saying? Like, you stuck with whatever you put in that block. So if I put 95 cent in there, you know what I'm saying? As it go up, right? Let's say if it move up to like the stop limit, if I put 95 cent in there, it's going to be what I said it was 539, right? So then as it move up, it's just going to keep me 95 cent behind this right here instead of 15%. You see what I'm saying? It's going to keep me 95 cent behind instead of 15%, right? That's the only bad thing about using trail stops when you can't use a percentage, because like once you start, and the one thing about trail stops, once they go up, right? Let's say if this move up to 650, right? And then now let's see, 650, clear this out. 650 minus 15% equals 552. Over here, you're going to be at 552, right? Let me put 539 here. Put 539 there. Right? So when it move up to 650, you're going to be at 552, right? And then we're going to go 650 minus 95. And right here, it's going to be 555. See, your stop getting closer. Your stop is getting closer when it's, you know what I'm saying, when it's going up. So right here is 5. It ain't no big difference now because it ain't no big move, but your stop is starting to get closer. So it's dropping. Your percentage that you want to trail is starting to drop down when you can't put in a percentage. You know what I'm saying? And the higher you go up, like let's say 720, and you might want that right there. So 725 minus 90. 630. 725 minus 616. See what I'm saying? Up here is 616. Down here is 630. Right? See, your stop is getting tighter and tighter when you can only use a dollar value, but it stays consistent when you can use, and you might want it to get tighter and tighter. So it's just up to what you're trying to do. So once you start moving into profit, that's when you start going into doing a trail stop instead of, or you can do a trail stop from the beginning. You can do a trail stop from the beginning, but the only thing I don't like about doing a trail stop from the beginning, once you set, like just say if this took off is at 525, let's say it went up to 550, right? And then the next day it pulled back down to 510, right? Because that's within your risk tolerance. But since it went up to 550, that pulled back to 510 may stop you out, and you'll end up getting stopped out. You know what I'm saying? You'll end up getting stopped out at a loss. You know what I'm saying? Because the trail stop at the beginning, the trail stop follows the price up, but it don't go back down. Once it start pulling back, it don't go back down. So that's why I don't like using the trail stop until after I get into profit a certain amount, and then I go in and start doing the trail stop. And if your platform don't allow you to do trail stops, the only thing you'll do, right, you'll just go in and just make stop limits, right? I forgot the S, right? You go in and make stop limits, right? And you'll put in 539, right? And then when it move up to 650, right, you'll go in and modify this order. You go in and modify and change the stop limit price to what I said. Oh no, it was 550. Yeah, 552, right? And then once it go up again, you'll go in and modify the order again, change it to 616. You just got to go in and keep modifying the stop limit order if your platform don't allow you to have a trailing stop. Don't allow you to have a trailing stop. Hopefully that made sense. The cousin asked me to break it down, and to the cousin who asked me to break that down, if it didn't make sense, just hit me in the DM again, and then we'll break it down. I'll try to break it down a little bit clearer. Do we got any questions before I let y'all go? Shout out for everybody who pulled up at lunchtime to hang out with me, especially if you still on your 9 to 5. I applaud the dedication. I applaud the dedication, because at the end of the day, everybody don't want to leave their job. A lot of people like their job. A lot of people just want a different stream of income. You feel me? All right. Do we got any questions? Any questions? Appreciate you. I appreciate you. Who that is? AJ. I appreciate you too. Who that? Oh, that's Trinisha. Is it Trinisha? Mr. Who is Mr. 79%? I don't know who. I missed that one. I don't know who Mr. 79% is. Let's see. You're welcome. You're welcome. I appreciate y'all, man. I appreciate y'all for tapping in. Yeah, good looking. Good looking. Hey, if y'all ain't got no questions, I'm gonna go ahead and oh boy. Y'all making my Rona act up. Y'all okay, if y'all ain't got no questions, man, I'm Travis Scott. Shout out to the real Travis Scott in the building, man. If y'all need somebody with some culinary skills, hit up my boy Travis Scott at Scott's Creation on IG. This man is retarded when it comes to, you know, that stuff you see on like the Martha Stewart Cooking Network when they take a roll of toilet paper, a paper napkin, and a tomato, and then come back with a plate full of food. That's Travis Scott. This man be, hey, I'm getting off on a tangent, man. So I ain't gonna hold y'all up. Scott's Creations on IG. I ain't gonna hold y'all up, man. I'm gonna go ahead and get out of here. For the people that's watching it on the replay, anytime, and for the people that's here live too, anytime y'all got a question that y'all want me to address, I don't be doing nothing during lunchtime, man. Hit me on IG and DM, and I sit down and do a lunchtime lesson. Like I say, all I need is one person to pull up, and I do the lesson, and it's gonna be saved in the playlist, lunchtime lessons, right? And then I'm gonna go. I already did 3 before, so it's gonna be lunchtime lesson with the date, and then what I'm talking about in there. That's what the title gonna be. It's gonna be the date and what I'm talking about in the lunchtime lessons, and then the Tim's Tidbits gonna be in the Tim's Tidbit live folder. I mean playlist. The Tim's Tidbit live playlist, that's going to be the Tim's Tidbits on Sundays at 3 o'clock. And then it's another playlist that say Tim's Tidbits Original. That's the original 7 videos that I did with my friends and family that I started at the beginning of how to open a brokerage account, show click by click what to do in Ally. And I went through like fundamental analysis, how to look up companies, how to research companies, technical analysis. I just kind of touched on it. all the way up to like options and portfolio management, stuff like that. But that's a good thing for beginners. If you know any beginners, tell them to tap into that Tim Tidbit original, and that you know what I'm saying, it's 7 videos that break down from the beginning to the end with a good little basis to start on. You know what I'm saying? Good little start place. All right, man. I appreciate y'all, man. Bet trying to get these futures heavy. What that is, I'm horrible with names, man. I'm horrible. What they say? Janie Les? I don't know, man. I'm terrible. I can't read to save my life. But if you're trying to get on futures heavy, let me tell you what to do, man. Learn one strategy. Learn one strategy. Backtest one strategy. Jay. Backtest one strategy on one instrument. I trade the ES. And the reason why I trade the ES is because I trade the Miles. Is that Miles with Control Chaos Kennel Miles? Man, I ain't never know your name. I thought your name was Miles. I didn't know your name was Jay. Yo, oh, he say nah. No, that's somebody different. Oh, okay then. All right. So one strategy on one instrument, and backtest that until you get that strategy down to a T. I got one strategy that I trade. If you go back and look at the other lunchtime lessons, I was breaking down trades that I got into or trades I was about to get into. You know what I'm saying? I be trying to do everything in real time. So if you go look at them other 2 or 3 that's in the list already, you will see my exact strategy. And I break down my strategy from the rip. Matter of fact, while I'm talking about it, I got it from ICT. I learned it from ICT. So it's a real simple strategy. This is the only thing I trade on the ES, right? Let me blow this up. All right, so Pete, like we got these lines, right? So I designate a spot that's got like it where the market, you want to identify where the market is going to get liquidity, right? That's the first thing you want to do. You want to identify where the market going to get liquidity, right? You see these lines I put on here, right? This green line, what that green line was, and this is what I talked about in the other Tim's tidbit. Now I changed these to weekly candles, right? That green line, what is it doing? Switch, man. Why is this not switching? What in the haberdashery? What just happened to my... Let me try to close this Ninja Trader and open it back up, man, because it's wilding. Let me try to open it back up real quick, man. No, don't save it. All right, let me see, because it was wild. I don't know what Ninja Trader was doing just now. Okay, here we go. All right. I was watching Zay set his levels up using percentages. I do the same. That's cool. You can do the same on the ES, but like, you know, find what worked for you. Like whatever worked for you, you know what I'm saying? You got to figure out what worked. Don't worry about like what I do, what the next person do. Everybody got to find what they relate to. You feel me? You look at all these people, then you figure out what resonate with your you know what I'm saying, your thing. So like peep, so the reason why I put this green line up here, right, was because this was like last week and we had already broke that high. So I put that up there as an ultimate stretch goal for the week, right? That's why that green line was up there. That was my ultimate stretch goal for looking for liquidity. You know what I'm saying? Not really just to get to, but where the market going to go to get liquidity. And why do I want to know that, right? Because the market had already come down. I know I got these lines all in the way. Let me hide these lines real quick. Let me hide these lines so you can see what I'm talking about. These are my 12 o'clock lines. I put lines on the chart. I break my days from like 12 o'clock to 12 o'clock. Okay, so you see this wick, this long wick right here, right? That's my 8 o'clock. That's my 8:30 line. I got that from ICT. I'm like, man, because I always struggling trying to find where the market started. I be looking, but I put that line there and I know where my 8:30 line is now. But anyway, if you see, like on this week, we came way down and we grabbed liquidity from up under all these lows over here. Right? So we came down, we grabbed liquidity up under all these lows under here. If I put my little X on, boom. See, we came down and we just pretty much matched that low back in July. But all these lows from July up until now, pretty much the market erased everything back to what date this is right here. The week of June 18th, from January 4th to the end of January, the market erased everything we did from June 18th. Tim, why you say that? The reason why I say that, because the week of June 18th, we opened up at 42, just say 42.21, right? We opened up at 42.21 on the week of June 18th, right? And then on the week of January 28th, we came all the way down to 42.12. You feel me? So it's like we erased everything that we had done in what that is, 6-7 months. You know what I'm saying? We erased everything we had done. But so the market came down and it grabbed up liquidity, right? And what I mean by grabbed up liquidity, when the market came up here, what did it do? Everybody that was going, everybody that was long, they bought long up in this area here. Up here, they had their sell stops sitting up there. So the market went up there and it ran their sell stops, right? Once the market got more sell stops than buy stops, what it does, it turns around and start looking for buy stops to match up with those sell stops. And where are they going to find buy stops? Buy stops going to be high and up under previous lows. So the market started falling down. When we got to this area right here, right? We fell down up under these previous lows. It started going up a little bit, but it wasn't enough to offset. Like it got down, they got more sell stops than buy stops. Started going up a little bit. It gathered up enough more. They got more buy stops than sell stops, or vice versa, whatever. You know, I'm confused myself. And then when it started going back up, they got more sell stops, right? And so it fell all the way down here and it collected up. So anybody that went, you know what I'm saying, anybody that was coming in here, they was buying it up. So they sell stops are resting down here. Came down and got them sell stops up under here. That's the liquidity, right? Once it soaked up that liquidity, look at this long wick right here. Look at this long wick that it made. Boom. That wick is super long. So now you know it done sucked up a whole lot of buy stops, right? Right? Because it was like, let me see. When you buy it, when you're going short, sell stops, right? So when you're buying it up, you got sell stops. When you're going short, you got buy stops. Okay, so they got a bunch of sell stops down here. They went up, right? So now what they got to do, they got to go up and find more buy stops to marry it up to. You see what I'm saying? So that's why I say look for where the market going to be looking for liquidity, right? So now I put that line there, right, for the ultimate reach goal of coming from down here. I put those red lines in, right, for areas of concern that it may get to, that it may run into where it may be pools of liquidity, right? So I put it here because this right here used to be a previous low, right? That was a previous low. At one point in time, support and resistance traders, this was support at one point in time because it came down and bounced off it. Excuse me. So now that we done broke through it, now the support and resistance traders looking at that as potential resistance. You see what I'm saying? It's a pain point for somebody. So now right here, they looking, you know what I'm saying, they looking to sell it here. Because before they was looking to buy it here. Now they looking to sell it here because that's a pain point for them. They trying to get back a little bit of their profits that they lost. So that was an area of concern, right? And then right here, the reason why I put this one here, because when we got to this point before, you see that long, it's like a super long wick right there. We wicked down off of it. You see what I'm saying? We wicked down. Put that back. Right? We wicked down off of that real heavy. And then if you notice, right, if you was on the live, when we was trading, I was talking about coming up here and getting out of the trade for that day at this first red line and maybe looking for a temporary short. It gave that. And then this was the next target for, you know what I'm saying, getting out of a trade, looking for a temporary short. And then if you notice, the sellers stepped in a little bit earlier before the seller stepped in here, but this time the seller stepped in there. So the sellers stepped in a little bit earlier. So that means the buyers hadn't ran out of steam. You see what I'm saying? The buyers started here and ran it up, but they had ran out of steam and pushed it down. So now that's the reason why I put all of that in there. Now let me get on. That's why I put in my levels to show where the market may be looking for liquidity, right? I want to see where the market may be looking for liquidity, right? And so now that I know where the market may be looking for liquidity, let me see. Go back. I can't remember which day that was. It was a good setup for my strategy. I'm gonna go back. I'm just gonna look at let's look at this day where it's Monday. Let's look. I think it might have been on. It was like Monday and Tuesday. We found the setup. Let me go in here and see if I can find a good spot where it was. I can't remember where it was. So basically, what my setup is, I don't feel like looking for it. So basically, what my setup is, right? Let's just say I'm gonna copy this. I'm gonna copy this line right here. Let's just say, right? This is where I say the liquidity pool is, right? This is where I say the liquidity pool is, right? So once it dips into the liquidity pool, right? We're gonna say once it dips into the liquidity pool, what we're gonna be looking for. Let's just say, let's call this what time is this? Let's come over here to 13:30. Let's come to this time right here. Let's come to this time for 13:30. Well, let's try to see if it's set up at 15. Let's go 13:30, right? So 13:30. Once we get into the liquidity pool, right, I drop down. I watch it on the 15-minute. But once we, step one, dip into the liquidity pool. This line right here is showing me it's liquidity below this line. If I was thinking about going short, there's liquidity above this line, right? So this is the liquidity pool. Think about it as a swimming pool, right? When you get close to the thing, you dive in, sploosh. You dove into the liquidity pool, sploosh. Now you diving in. Once you in the liquidity pool, right, I drop down to the 2-minute, either the 1 minute, 2 minute, or 3 minute, right? So I should have put a box there so I know where that, whoa, was that a gap down? What in the haberdashery just happened? Look at this right here. I just noticed that. What in the world just happened? Look at that gap down on the ES. Y'all excuse me. I done went to a squirrel moment. I done went to a full squirrel moment. What in the haberdashery? Look at this gap down on the ES. That thing gapped all the way down to 4,500. What in the world just happened? Can that be so? Can that be so? I'm sorry, y'all, bear with me for 1 second. I'm so glad that I got stopped out in profit on those. Yes, it is. Yes, it is. That thing down to 449. Golly. And y'all see I got my alert set right here at 444 to start watching it. Because once it, I can show you right here. I can show you right. This on the daily level. I'm glad I got that. See, look at God. He distracted me for a reason, right? This right here. Okay, I can show you my setup on these are daily candles, but this is my exact setup, right? So here we go. Now, how do I change it to an arrow on here? Arrow. There you go. Right? So here we go. We coming down. The bottom of this pink line right here, this is the liquidity pool. So we coming down, sploosh. We splash in the pool, right? That's step one. Splash in the pool. If you're taking notes, that was this morning. Okay, if you're taking notes, step one is dip into the liquidity pool. Once it dip into the liquidity pool, you're looking for a swing high and a swing low to be formed. That's the step two of my strategy. You're looking for a swing high and swing low to be formed. So you dipped in the liquidity pool, and right, what's a swing high? A swing high is a candle right here, this red one here, with a lower high to the left and a lower high to the right. This is a swing high. Just imagine it swinging. Whoop, doo, whoop. That's the swing high. See what I'm saying? You got a candle here with a lower high to the left and a lower high to the right. That's the swing high that's formed. And then a swing low. What's a swing low? You got a candle with a higher low to the left and a higher low to the right. Zoop. That's a swing low. So you dip in the pool, right? And you're coming up. This is a higher high, but it's not a swing low. Why not? Because it's a lower high. I mean, this is a higher low, but it's not a swing low because there's a lower high to the left and a higher low, a lower low to the left and a higher low to the right. That's not a swing low, right? So step 2, wait for a swing high and a swing low to be formed. That's step 2. Step 3, once the swing high and the swing low is formed, you want to see that swing high or that swing low to be broken with force. See this candle right here? It broke that swing high with force. That broke it with authority. That's step 3. You want the swing high or swing low to be broken. If you're looking to go short, you're looking for that swing low to be broken. If you're looking to go long, you're looking for that swing high to be broken, right? With force. It's broken with force. Now, this candle doesn't have to close above this. It just needs to break it with some authority, right? Once it breaks it with authority, the very next candle needs to form a fair value gap, right? And what's a gap? ICT call it a fair value gap, but what's a gap, right? If you don't know what a gap is when you got 3. Wait a minute, that's supposed to be a rectangle. What in the world? What is that? Rotating rectangle. I don't want to know how did rotating rectangle get up there. I want regular rectangle up there. Get out of here, rotating rectangle. All right, so here we go. All right, so fair value gap or gap period is when you got 3 candles, right? 1, 2, 3 candles in succession, and the third candle and the first candle don't share a price. And if you notice, right, the high of this candle and the low of this candle never overlap. So that's a fair value gap. So that's 4. You're looking for that fair value gap to be formed on the very next candle. This is just for my strategy. So step 1, dip into the liquidity pool. Step 2, form a swing high and a swing low. Step 3, the swing high or swing low get broken with authority. Step 4, the very next candle, when that candle closes, you want there to be a fair value gap. That you want that very next candle to form a fair value gap, and you're going to look at the candle before the very first one preceding the candle that broke the high, and the one that just closed. You want there to be a fair value gap right there, right? That's 4. That's all 4 parts of the setup are set now. Now this when you go on high alert. You're on high alert looking for your entry. Now what happens? It may continue to trade up as you see here. But you're waiting. You're not going to enter once this is formed. You're not going to just jump in. You're going to wait for it to trade back down into this fair value gap, right? And if you see here, this down close candle here, right? Let me shrink this up, right? So after we go into the liquidity pool, we form this swing high and this swing low. Once we break this right here, now this qualifies these down close candles to be in an order block because we went into liquidity, we formed the swing high and a swing low, and then we got a temporary shift in market sentiment. This temporary shift, after we broke this high, this shift in sentiment now qualifies these down close candles here to be your order block, right? So you're either looking to make an entry off the top of the fair value gap, the bottom of the fair value gap, or the open of the order block, right? That's where I'm looking to make my entry. So let's just say, boom, this is the open of the order block, right? Because that's the open of the entire block. If this was just 1 candle, it'd be 1 candle. If this was 3 candles, it'd be 3 candles. But I'm looking for the open of the order block, right? So that's where I'm looking to make my entries, either here, here, or here. That's where I'm looking to make my entries. So as the spot is trading back down, you see I got a notice. I got a notification set right here to let me know once the spot trades down to 440, 450. Once it trades down to 440, 450, I'm going to be on high alert looking for the spy to give me confirmation that it's ready to go back to the upside, right? Now, what's going to make me not get into my trade? Like, just like the other day, I didn't get it. I did the live, I think it was either yesterday or day before yesterday. Go back and look at the video. But I didn't get into the trade because it started trading funny. It was my complete setup. Everything had set up. But when it started coming back to the fair value gap, we didn't come down and feel it. We didn't come down to the order block immediately. We touched the top of the fair value gap and we started consolidating. We consolidated for like almost 10 minutes. I said, oh, I'm leaving it alone. So if we hit that fair value gap and we start consolidating, I wait. If we hit this fair value gap and we slide down past the open of this order block, more than within reason, it can dip a little bit lower. But if it comes down to the bottom of this order block, done deal. That ain't my trade. I ain't messing with it. You know what I'm saying? I ain't messing with it because I was looking to go long and I ain't messing with it. I ain't going long there. It may come back to it another time. It may set up again later, but that's my setup. One more time for the people taking notes. You come down, step one, come down, dip into the liquidity pool. You got to identify where the market is going to get liquidity. Looking at the market overall, we made all new highs on January 4th, right? So once we made them highs and start falling, where are we going to look for liquidity, right? You can come here. You can come here. You can come here below all these lows, right? Right? How far are we going to go, right? And so when we started falling on January, right? When we started falling and we came down, what's that lowest low? Boom, right there. Up, get there, Tim. We dropped over 12% from the high, right? That's correction territory. Now, everybody and their mama like, oh, we got our 10%. Let's buy it back up. You see what I'm saying? That's why it wicked back up like that. The big boys, they done got enough liquidity and they ready to step back in. You feel me? And now it's pushing back up to the upside. And then we came up to where? We came up to here. Because guess what? The rate's still gonna rise. So all these tech companies and all these people that need to borrow money to make money, we still ain't got no new catalyst yet to push us all the way back to all-time highs. So guess what? The market ain't ready to just run back to all-time highs right now. You see what I'm saying? And 2020 was an anomaly. So people got to get used to the environment that we trading in now. You got to be real. You got to be real patient and set realistic targets. You know what I'm saying? Set your realistic targets. If you're doing a short term monthly, set it for 50%. You know what I'm saying? If you're doing a leap, set it for, you know what I'm saying, 50%. If you're doing a short term, set it for 50 to 100, depending on how the market moving. You feel me? Man, thank you. I've been a little confused on the fair value gap. Oh, ain't nothing. That's just the way I see it. This is how I see it. I learned it from ICT. I put this all together from looking at a million ICT videos. You feel me? Like, if you go to ICT page, let me go to YouTube. If you go to ICT page, right? This is channel right here. This is channel right here. If you go to this page, go to playlist, right? This is the new mentorship right here. In this mentorship, he's teaching this exact strategy and he breaking it all down exactly how to do it. Now, I put this strategy together by looking at all of these Forex videos that he did. You know what I'm saying? Because it's dibbled and dabbled in through all this stuff. He give a whole bunch of different strategies, but I call this the Liquidity Run Reversal. Right? It's because it's a reversal strategy. And I call it the liquidity run reversal because you run in liquidity and you run into liquidity and then you reverse it. You see what I'm saying? You run into liquidity and you reverse it. But if you look at he got 5 videos up right now. For the 2022 mentorship, he breaking down this exact strategy for all of 2022. And he posting videos every Tuesday and Thursday night at like 10 o'clock p.m. Eastern Standard Time, I believe. But yeah, that's just the way I see it, and hopefully that helps somebody. You don't need to know how much. You just help me, Tim. Keep them coming. You need me. I ain't a mentor, but I'll answer a question. Just hit me on my DMs on IG. I'm about to start leaving IG alone for real. That's why I'm on YouTube now. I'm bringing everything over to YouTube because these people impersonating me now, and they trying to snow my family. So. And Instagram keeps saying they not violating no rules. So y'all know how I am. When somebody pisses me off, I'm all about protecting my peace. So I'm like, hey, I'll take it over to YouTube. People already voted to go to YouTube anyway. You know what I'm saying? People say go to YouTube anyway. But yeah, man, I done been on here for an hour, so I ain't gonna hold y'all up no more. I appreciate y'all for tapping in. I'm gonna switch back over to full screen. One more time. Any questions? Any questions? Any questions? On the countdown. 15, 14, 16. 15, 14, 13, 12, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Appreciate y'all, man.